Tech stocks were the star of the equity market in 2023, but we have started the new year with a bit of a wobble. The NASDAQ has lost ground for 5 straight days, all 3 this week, all 3 so far in 2024. Futures pointing to losses once again at the open. This also coming as Apple getting hit by a pair of downgrades on the street. Joining us now to discuss this and more is Paul Meeks. He's a veteran tech investor and currently finance professor at the Citadel. Paul, thanks for hopping on. I want to talk, just kind of start with what your view is on what we've seen in tech, specifically the NASDAQ starting this year after a more than 40% gain in 2023. Certainly, one had to expect some level of, temperament, let's say temperance of the enthusiasm for investors as we got into this year. Anything concern you in what we've seen over the last couple of weeks, or does it kind of track with maybe how you would see this kind of market rally evolving?
I still am pretty constructive on the tech sector, and I think you nailed it on the head. I don't think we have a fundamental issue. I think the drivers, including the most important driver, artificial intelligence, are still intact as we roll into 2024, but we've simply come too far too fast, particularly with the explosive move upward in this sector ever since November began, that we're probably due for a little bit of comeuppance. But I would wager, and of course I do it for a living, that when we get to the end of 2024, the S&P 500 will have a pretty good year. It'll outperform its 10% long-term average. Not as great as last year, but still a solid year. And the tech sector may not be the top of the class of the 11 sectors, but it's going to be one of the leaders. So the way I look at this is let the profit taking in technology exhaust itself and get prepared to reload on some of these stocks, because I think we're going to do quite well. There's a little bit of angst right now, as Jennifer was talking about, as to the path of rates. Specifically, when will we have our first cut? Does it really matter at the end of the day if it's March or May or June? I don't think so. As rates head down, tech stocks and other aggressive growth stocks should do quite well. So I'm waiting patiently. It's more of a technical call rather than a fundamental call to buy these stocks once the profit taking, and I think that's all it is, and the tech sector exhausts itself.
Well, Paul, talk to us a little bit about that technical part of the call here, just in terms of investors looking to put money to work, maybe buying the dip on some of these larger cap tech names that really outperformed and carried the market in 2023. What levels should investors then be looking at?
So I'm not really a chartist, but I take a look at support on the 50-day, and then after that, perhaps the 200-day moving average. The other thing that's important is you don't have to wait too long, just a couple of weeks before we have another spate of quarterly earnings reports, which should either boost our confidence in various names or make us a little bit more cautious. So I think those are the keys. There is no rush. What you want to do is see these stocks find some support, the trading volume in said stocks start to dry up, and then you'll feel comfortable that the profit taking has exhausted itself.
Paul, you mentioned corporate earnings are coming up. I think starting end of next week, we'll get some of the big banks reporting. I want to get your view on the AI fundamental trade, like the amount of money that is actually being invested into this theme. I'm just curious how you think about the way it differs maybe from, the 2018 blockchain hype, right? And maybe does it compare to what we saw around fiber buildouts, before the tech bubble in 2000? Just curious for your views on that, actual spending we're seeing from companies.
Yeah, I think what happens in 2024, even though it sounds kind of boring to say, is the strong get stronger, because what I see this year is another very aggressive year on spending building large language models. So I don't actually see opportunities until later years for software apps that are cool products that are AI driven. We continue to build large language models, and who does that benefit? That benefits the hardware and particularly the semiconductor names that are essentially making this happen. And so I think it's a legit monster theme. Like anything, though, and I've been doing this a long, long time, some stocks are overhyped right now, and they may not at the end of the day make many dollars off of AI at all. but the ones that are supplying the infrastructure to support, particularly over the next year, building out these large language models, will continue to do quite well. But one of the tells that we'll see this year is Microsoft's Office 365 Copilot. They're asking $30 a month for a base service that only costs half that. If that ends up seeing a lot of pickup from customers, then you'll say, okay, people are going to spend on AI. But that'll be a really important tell. Let's see what happens with the ramp of that product in 2024.
Yeah, and Paul, maybe in 10 years we'll circle back on the companies that actually made a ton of money on AI, but the stock price didn't go anywhere. We saw a bunch of those back in 2000. I want to get you out of here on a name that we haven't discussed all that much really last couple of weeks, which is Meta. Stock that was up about 165% or so, I think, in 2023. And if it's possible to rally 160% and be a stealth rally, I think Meta did it last year. Curious what you see as the story there as we get into 2024.
Sure. Now, one of the things you have to remember about Meta is its market cap dropped about 2/3 in 22. So the comeback in 23 was great, but it had a very deep hole to fill. The way I look at Meta is with its strategy with AI being totally open source. I like that. I think they will be a beneficiary of the theme. In the meantime, we should have, unless we have a recession in this country, I don't think we will, we'll have a nice reacceleration in digital advertising. And also we'll get another jump in digital advertising because it's an election year. And Meta should do quite well. I also like Google, but probably Meta more, but it won't have the return it had last year. But I do expect it to outperform and maybe be on the top of the class of the Magnificent Seven in 2024.
All right, some reasons to still be optimistic about those tech favored names that we saw in 2023. Paul Meeks, thanks so much.
Thank you.